really get into it, I have to say that my favorite comment of this whole thread goes to this person. Gotta love it. Gotta love all those people chasing the booger sugar, right? Hey everyone, Dana Hashi here with Hashi Trades. So let's talk about some news that came out over the weekend. As you can see here on my screen, looks like our favorite buddies, Melvin Capital, are being sued up the wahoo. Oof, that must be pretty sore. By a lot of major firms that include major brokerages. So let's scroll down here. This is just showing you the 11 different lawsuits. Thanks for your due diligence here of that they're being sued for now. Looking deeper into it, you can see that there's a lot of major brokerages on this list: Trading 212, Charles Schwab, Robinhood, E-Trade, Morgan Stanley, TD Ameritrade, Webull. Okay, so all of these things, basically why they're on here is because of what happened. A lot of their customers, their clientele, were not able to buy positions, only close them, thus preventing the squeeze apes, you know what I mean, from being squeezed. Now that is clearly a problem. Now, what do I think about this moving forward? Well, I do think it's definitely going to put them in, of course, a lot of legal trouble, some financial trouble as well. But at the end of the day, there's going to be another big banana grabber, and it'll probably just be a slap on the wrist. And by slap on the wrist, I mean paying a hefty fine. I don't think everyone involved is going to go to jail or anything like that, because, you know, they don't really crack down that hard on these guys. They just give them fines. The fines are kind of minuscule compared to the profits they could make by taking these risks. At the end of the day, the hedge funds still rule. Institutional traders still are coming in with all the bananas. So that's all I have to say. I would love to know your thoughts. Do you think that this is really going to change the system? Do you think new regulations are going to come into place? Do you think it's really going to hurt? Well, of course it's going to hurt Melvin Capital, but moving forward, do you think hedge funds are going to be more cautious? How do you think that this might or might not change the market? Please let me know your thoughts down below. And happy trading! Almost the end of trading days in March. So see you later. Bye. So I wanted to address actually something that I get a lot of questions about, which is the big question that all of us apes are always wondering forever, and is, has the squeeze been squeezed? Now, depending on where you look, getting this information can be really tricky, because you look on Morningstar, you get one number of the short interest, and then you look on TD Ameritrade or Yahoo Finance, you get different numbers, and then the last date that it was officially updated is varying across all of these different platforms. So in reality, what I would say is, according to my own research, Morningstar is the most accurate and up-to-date source of information about the short float. But even given that, when we're getting the short percentage, the short interest, it's actually delayed information. So the information that we're using to figure out what the short interest is always delayed. So it's never like we're getting real-time information. So we can say, oh, the short interest is this and that, but that's actually based on data from weeks ago, literally. So I wouldn't really focus too much on that. It's good, obviously, if the number's higher, but at any given point in time in our trading, in real time, we don't know what the short interest is. So you have to just kind of take that with a grain of salt. But I do know, we all know, that as long as the short interest stays high, there's always potential, greater potential for a short squeeze, and that is the most important thing. So anyway, see you later again. Bye!